everyone, this is Mike Hamilton from Trade the Easy Way, and I'm just going to go through the big picture at the moment, the way I see it, and see if that resonates with you. What I'm seeing is a market that is not at the moment going to lie down. This is the 20 EMA. All the time we are above the 20 EMA, then you just need to keep buying pullbacks. Today we have just come in contact, just about come in contact with the daily 20 EMA, and we are 45 minutes off the US close and we're holding up. So all the time we are holding up, we need to keep buying this market. And what's propped this market up for all this time is cheap money. Interest rates are still in practically zero in the US, and that is reflected in these share prices. So all the time we have got cheap money, then we stand a chance of these markets continuing to hold up. If there is any fear stepping into the markets, then obviously that is going to start showing through in the charts, and of course any interest rate rises or particularly wage price inflation coming into the market, which there isn't at the moment, then that will have a direct impact on these charts and you'll start to see some selling. So the reason why I've drawn this chart like this is because we are capped at the moment under this. So we have got this pattern forming where the lows are getting bought but the highs are also getting sold. So we're in this area here. We are potentially edging into a sell zone, because if we start closing underneath 900, 17,900, then we could really start to close under the 20, close under the 50, and so on, and then just drop down to these pivot levels, these fib levels. In the meantime, this is holding, and we could even bust up here. We hold here, start closing above 18,000, and then we could retest 18.5, who knows, maybe 19 plus thousand. So stay with the charts, but we are in an area where this could fall apart. The other factor is that we are fast approaching the end of April, coming to May. Sell in May and go away. I mean, that's traditionally the period where we come out of the earnings season. There's a lot of profit taking, there's lower volumes, and the markets just drift lower on that basis. If we look at what happened last year, let me get the pen. Let me just sort this out. Hang on. This time last year we were holding up, we were looking okay. We had burst up into mid-May, the sell-in came in, and then we started to get this repeated downforce until we got the autumn draft to the downside. Okay, so that's potentially what we could see. We could see another little bit of a flip into this sell zone, and then as we come out of the week, fall back. So we have Fed day on Wednesday, we have US GDP the day after, and we have UK GDP on Wednesday. Otherwise it's a fairly clear week, not a lot of data coming into the week. So just be aware that we are holding up, but we are on a bit of a knife edge. Okay, let's look at the weekly and see what's happening with the weekly. You can see we've had a couple of weeks of higher closes, but if we get into 18.1 and 18.200 and so on, we could find some sellers up there waiting to pounce. Okay, so it's a tentative area, but we are at the moment just holding on. And let's now look at the dollar, because like I said, the strength of the dollar. If the market is looking for interest rate rise, then this is one of the pairs where it should show through. I've been buying dips in this one today, looking to see if we can start to have a bit of a run. On the weekly, the reason why I'm looking to buy this is because this area here in February last year was a crucial area where we eventually broke up in July last year. And as I speak, the Dow is inching a little lower, and this US dollar CAD is getting bought. Okay, so even though we've had this selling, this is such a pivotal week, 50% is such a pivotal area that this could drag the markets, or drag this market back up if buyers come in at this 700 level and start to close it and head for 130 plus. Right, the trend trade, however, is short. Yeah, because all the time you have red bars in front of you, you should trade to the colour of the last bar. And so there is a lot of traders short this US dollar CAD, and at the moment they have to say they are winning, because 735 was a major level last week, which we have failed to close above. Okay, so if we now switch to the Euro US dollar, this held up, and we are sitting on the weekly 50 EMA here on the right, on this chart on the right. So no reason to get short this market. There is a lot of congestion above it, and I have been looking on the short side. In fact, the 4-hour chart has a lower close on it, so it's certainly struggling but not doing much. Of course, it's the beginning of the week, Fed Day is coming, so if we push into 113 and start selling, or even into 114, then I would look to see if this could break last week's low at 112 and come and visit 113, and then we end up with a 20 and 50 EMA cross. We could come all the way down to the bottom of this channel, because at the moment we are struggling. We have struggled with 114.50 area, so I've shorted up here for a push down here the other week, and I'll continue to keep shorting to see if that can break down. As I say, early part of the week, not unusual to see counter trend move as traders let this drift back up, ready for them to get short at these pivotal levels. Okay, so I am looking to see if we can see some strength in the dollar in the run up to Wednesday. Wednesday is going to be crucial, potentially for taking us right into the summer. Okay, now let's start looking at the US dollar yen. I commented over the weekend that we have had some decent pushes up in US dollar yen, only to get sold into. And I have to say, at the moment, that is very much what we're getting at the moment. So if there's no prospect of a rate rise in the coming weeks, i.e. out of Wednesday, this could fall out of 111 and then potentially just keep coming down, and then we've got other levels of support down at 105. So this 110.80, that kind of area, is an area which could get bought. Now we've broken up through its trend line, but what happens on this area here is going to be crucial. So at the moment we're just consolidating in it, and we're holding up, but nothing more. So a full pullback to, on this weekly chart, 980 or 111 roughly, just under 111 could be the potential to buy. Okay, let's just look at some of the big movers. We've got pound New Zealand really creeping up. If you're a day trader, then just buy the dips. If you are a swing trader, then we need to see a swift move down. I would bid on something like 208.70 to see if that could get bought. Let's just put a push down there. So something like 208.80, that kind of thing. Let's see if we get a push down there during this week, at which point I would buy to see if we can then push up into 215, etc. Pound yen is holding up nicely. The dips have got bought today. I was taking some of that. Not a particularly great close. We could roll over. You can see a lot of resistance at 161.60. So again, I would still look out for a bigger dip. If we can come into 158.50, 159, that's where I'd want to pick up some. We still haven't even tested the 1650 EMA since it's broke up. So I would still be on the lookout for that, for a bullish breakdown consolidation, a breakdown in a bullish consolidation for the bargain hunters to pick it up and potentially run with it. Alright, and pound Aussie dollar, it's had a nice day. It's at the weekly 200, but looking as if that could punch through and start to attack some of these higher levels. Stocks, let's look at some stocks. Barclays. I'm looking for this to pull back. And then buy any dips around about the 150-160 mark. I am also interested in let's look at the retail sector, because the administration of, or the failure I should say, of BHS sort of proves just how tough the retail sector is at the moment. And so if this starts to falter, I think this is a strong stock. It's in recovery mode, but prone to some dips. Sorry, let me just tidy this up a bit. Ooh. So you can see we're struggling with this zone here. We've had, this is potentially the third lower high. We've not really knocked into that yet, into that resistance line. But I would be happy to mop up some dips on this. 170 would be great. So I think we will see this at least potentially a couple of days of dips, and then it's a question of where we are as we come out of Wednesday and in Thursday and head into the weekend. But in the meantime, this is, it's a nice weekly close last week. We hold here around about the 170 mark. We get a dip to 170, 180, then this could start to climb back up to 200. Um, so look at the health sector has been doing pretty well. This is Bristol Myers Squibb. I called this earlier in the year, and it's had a nice run. It's got a heck of a lot of resistance up here, so that's going to have a nice push to get through that. In the meantime, other parts of the health sector and the pharmaceutical sector have been doing really, really well. This is Gilead Sciences. If you look at this daily, I think we've got. I think we'll see some profit taking here. So if we see a push into 97.50, I think that's the time to see if you can pick up a cheap price for that to pull back to that trend line and then potentially start to retrace up to these levels here. Cyclically, this is a good time for pharmaceuticals and health sector. We have, of course, got a political issue here, as if the Democrats lose a grip on the presidency, Obamacare could be interfered with or even reversed. But in the meantime, just trade the charts. This is Novavax. I think this is a good solid pharmaceutical one with a good product range. I think any test of 49 is worth a punt. We've got a lot of congestion above, but I think that stands a chance of working. So I am liking Novavax. There's the daily, pulling back into the support area with a 50 and 20 cross. So these are the kind of charts I like. Don't see anything else in that on my short list at the moment on that one. Let's look at, when talking about potash, I like potash a lot. I think if you're interested, then 1720 is a nice pullback. Tyson Foods, that's had a good run, that's pulling back. Nice consolidation pullback will be 60.40. Monsanto, that's had a good week. It's in a congested area. You might want to try and buy 90.50 if you see it. Deere, John Deere. Okay, so at the moment the stocks are looking as if they are getting bought, but they are potentially coming into problem area, an area where stocks may be viewed as being expensive, and you might see some selling as we come into this area of congestion. Whereas overall, I would still personally buy dips in stocks. I think we could tread a lot of water until Wednesday, at which point, if the dollar does see some strength, that could have a major knock-on to retail. Of course, the indices, it could knock the stuffing out of oil, and have a severe impact on the market. But at some stage, rates have got to go up. I think if anything, the Fed have delayed too long. I think interest rates have stayed too low too long, and you've got exaggerations in the market. You've got potential bubble features in the property market, both here in the UK and the US, and I think that's dangerous. That could leave consumers really hurting when the rates do finally rise if they end up buying property at very, very high rates, and that could the higher the stock market goes, potentially the harder it could fall. So I'm on alert for strengthening the dollar. Okay, I hope that helps. I will elaborate more as the week unfolds and see you at the next update.